Gang. That's 877-600-4264.
The stocks discussed on Phil's Gang are not in any way a recommendation or solicitation to buy, sell, or hold. If considering acting on information presented, we first recommend you seek out a competent, licensed professional for advice. Get ready for the radio show that tells you what Wall Street doesn't want you to know.
Oh, I'm a money magnet. Money's coming to me. Money sets me free. I'm a money magnet. Money's coming to me.
It's your daily dose of how to manage your money. And now it's time for Phil's Gang on the Off the Wall Street Radio Network. With your host, Phil Grandy.
Well, I personally think the Fed should drop rates. I think they really slowed us down. It should actually now be quantitative easing. And I think they should drop rates.
Quantitative easing. He's calling for quantitative easing. You don't call for quantitative easing if you're telling us we have the fastest economic GDP growth in history. We have the best wages ever, the strongest economy ever, the biggest capital investments ever, corporate earnings the best ever. You only do quantitative easing when you come out of crashes and recessions, and you got to and quantitative easing. Remember, it used to be like stock buybacks. They're just bad. Quantitative easing is fraudulent. Stock buybacks are fraudulent. It's a game. It's a quantitative easing is it's a game to get your confidence. That's what it's all about. It's a confidence game. I'm going to explain all that. This is crazy. And if we keep interest rates low for much longer, keeping interest rates low for too long just kills the economy. And that's why our economy is not growing. That's why the economy is not at 4 or 5%, because interest rates are too low for too long, which kills small businesses, which is the backbone of our economy. And who are the people that develop small businesses? That's the middle class. And that's why the middle class is shrinking. First time in history, we have more small businesses closing their doors than opening doors. This is crazy to go for more QE. All it does is help the very wealthy. And I'll get into that in a moment. But let's get to the jobs today. This was really interesting, the jobs today.
Non-farm payrolls rose by 196,000 jobs in March. The unemployment rate unchanged at 3.8%. Average hourly earnings, they were up 4 cents in March. That's a 0.1% gain over the month.
Okay, that's the most important part of a jobs report. Never mind all the rest of it. Gains, okay, wages. Because when you see wages going up, that's when the Federal Reserve gets nervous. They don't want wages going up because wages is inflation. And that's when they start raising interest rates again. But look what happened when they raised interest rates this time in the best economy in the world, we're being told. A lousy 2.5%, when normally for the last 20 years, interest rates are always at 5%, not 2.5%. We can't even handle 2.5%. 5% would put us in a depression. So this is amazing, this job report. And if you go back and look at the job report today and you break it down, all but 26,000 of the 196,000 jobs are any good. Just 26,000 of the 196,000 jobs were good. All the other jobs, other than the 26,000 jobs, are all lousy jobs. They're terrible, mostly all service kind of jobs, lousy paying jobs. It's just amazing. But let's go back for a moment and let's really tell the truth here, okay? I think this is truth time. Now, I'm amazed at this. This just amazes me. But let's go through it. Okay, first of all, quantitative easing, stock buybacks. They're separate. First comes the quantitative easing. What is that? Well, first of all, quantitative easing, okay, it's a trick. It's a confidence game. What the Fed does is come in and they print money. And when they print money, just like they did in 2008, they print all that money so that they can buy treasuries. That's called the long-term rate. Treasuries, bonds. And buying treasuries, then the interest rates, called yields, will drop. Well, that's very helpful. You do that when you come out of a recession or come out of a crash or during a crash, right? Not coming out of a crash. As your market's crashing, you try to stop it with quantitative easing. When you have a terrible economy or even going into, before you go into a crash, you start, when you see you got a terrible economy, you start with quantitative easing. You borrow, you print this money, and then you buy these bonds to get the interest rates on the national debt down. Now, the interest rate on the national debt in 2008 was like $185 billion. Now it's almost $400 billion. So the interest rate, again, was in 2008 was, as I say, about $185 billion. But the rate itself in 2008 was about, I think it was about 1.5%, 2%. When the market got hit, and when the market tipped over, we had like a 3.7% interest rate. I'm sorry, we had a 3.7% interest rate in 2008. That's what tipped the market over. They started the quantitative easing because they wanted to get that 3.7% rate down. Because here's what happens. When you have that kind of an interest rate, and you've gone from $185 billion to $400 billion, and you're paying all this interest, what they have to do immediately, the government, they start cutting their budget by 40%. And where do they cut their budget? They cut their budget with infrastructure. That's the first thing they hit is infrastructure. Under Obama, when he hit infrastructure, because again, they wanted to cut that interest rate down, because if you can bring that interest rate down and get that pressure off the interest we have to pay on our national debt, that's a good thing. Plus, it brings the interest rate down on mortgages. And remember, housing is the biggest thing for this country. You want housing going on. So the problem is, yes, you bring these interest rates down, but but the problem is it kills the economy on the other side. See, when interest rates are going up, that's a good thing. That means the economy is strong. When you're bringing interest rates down to drop the rate on your national debt, that's a bad thing. That means the rate that we're being charged on our national debt, we can't handle it. And it tipped us over into a stock market crash. So quantitative easing, just think of it this way, is to get that interest rate down on our debt. Now, once you get that interest rate down on your debt, the other thing that happens is interest rates come down on short-term rates. That means the rate you pay on your car, your MasterCard, your student loan, if you have a small business loan, then those rates come down as well. But again, remember, they do that to give you confidence to go out and buy, to start spending. And what they do with that quantitative easing, once they drop those rates, they create a lie like they did in 2008. What they tell you is, oh, we're going to bring all these interest rates down so that you can start buying again, but we're also going to take this money and we're going to loan it to large corporations. And those large corporations, they told us in 2008, would take that money and they would start spending all that money. They're going to get all this money. They're going to borrow money free and spend all that money in new machinery, new equipment, new technology. That way their productivity will go up, and that way your wages will go up. We're also going to bring interest rates down to zero to give Wall Street money at free, 0%. We're also going to give the 1 percentile, all the people, the 1 percentile Wall Street hedge funds, we're going to give them all this free money so they can buy stocks, because 85% of their income comes from stocks. But that's going to help you, because that wealth that they're going to make as the stock market goes up, they're going to take that wealth and create new businesses and create all kinds of jobs. All of that was a lie. See, quantitative easing is a big lie. It's a confidence game. That's all it is. To get your confidence up, to lie to you, to get you to spend. All of it's a lie, and it has been. We've never had a recovery. The only people that recovered their losses was the wealthy. We'll be right back after this message.
Want more information on this show? Go to philsgang.com or give them a call at 877-600-GANG.
I will make sure that all the stocks that we are engaged in that are going up, we will get maximum returns, and we will be out of those stocks by watching our color-coded chart. You never again will have to worry about being out of an individual stock or an ETF or an index when the market crashes. You will be out before it does happen. All you got to do is join my gang, 877-600-GANG, 877-600-GANG. I'm reaching out to you. All I'm asking you to do is to reach back to the kids at St. Jude when you're making money.
Don't wait. Find out more at philsgang.com or call 877-600-GANG. That's 877-600-4264. That's 877-600-4264. With the philsgang.com membership, we bring investors right to the floor, into the pits with Phil's daily live webinar classroom. Get inside market guidance on investing strategies. Find out more at philsgang.com or call 877-600-GANG. That's 877-600-4264. Thousands of investors trust philsgang.com to deliver the tools and resources they need to invest with confidence. With the Philsgang MaxVest 1000 stock charts, you have the power to create highest quality, color-coded, easy-to-read charts in just a few simple clicks. Designed specifically for technical analysis and investing, the Philsgang MaxVest 1000 stock chart seamlessly integrates and functions on mobile, tablet, desktop, and web devices. Isn't it time you leave behind the old stock research routine, spending hours reading websites, out-of-date newsletters, and magazines? Instead, subscribe to the Philsgang MaxVest 1000 stock charts and plan your entire investment strategy. Find out more at philsgang.com or call 877-600-GANG. That's 877-600-4264. 877-600-4264. Sign up at philsgang.com. That's philsgang.com. 877-600-4264. 877-600-4264, and we'll see you on the charts. Short on time but want to invest in the stock market? Let philsgang.com help you. For only $39.95 a month, you get complete access to all of Phil's powerful investing programs, videos, and resources.
That works for me. Log in, watch the videos, and make profits.
Find out more at philsgang.com or call 877-600-GANG. That's 877-600-4264. philsgang.com. philsgang.com has taught thousands of people from all walks of life how to invest and make profits in the stock market. philsgang.com can help you generate extra income, maximize your retirement financial savings, and teach you how to avoid costly investing mistakes. With the Philsgang membership, you get all the comprehensive stock research and data, analysis tools, Phil's recommendations, and the professional customer support you need to make smarter, more profitable investing decisions. Don't wait. Call today, 877-600-4264. 877-600-4264. 877-600-4264. Or go to philsgang.com. That's philsgang.com. 877-600-4264. Did you know Phil Grandy hosts a daily live stock market investing webinar class? Never miss a beat with the market and your investments. Learn, invest, and profit with philsgang.com. Call 877-600-4264. That's 877-600-GANG. Thousands of investors trust philsgang.com to deliver the tools and resources they need to invest with confidence. With the Philsgang MaxVest 1000 stock charts, you have the power to create highest quality, color-coded, easy-to-read charts in just a few simple clicks. Designed specifically for technical analysis and investing, the Philsgang MaxVest 1000 stock chart seamlessly integrates and functions on mobile, tablet, desktop, and web devices. Isn't it time you leave behind the old stock research routine, spending hours reading websites, out-of-date newsletters, and magazines? Instead, subscribe to the Philsgang MaxVest 1000 stock charts and plan your entire investment strategy. Find out more at philsgang.com or call 877-600-GANG. That's 877-600-4264. 877-600-4264. Sign up at philsgang.com. That's philsgang.com. 877-600-4264. 877-600-4264, and we'll see you on the charts.
Does your money manager send you an alert when the stock position that you're in goes up or it goes down? Does your brokerage send you an alert to get out of a stock position so you don't lose money? Of course they don't. Here at philsgang.com, we keep all of our members engaged with the stock positions that we recommend. Nobody does that for their clients. Nobody. Go to philsgang.com and become a member to get up-to-the-minute alerts. That's philsgang.com. Stop losing money and start making money with Phil's Gang.
Welcome back to the Phil's Gang Radio Show. Want to know more about Phil's Gang? Go to philsgang.com or give us a call at 877-600-GANG. That's 877-600-4264. Now, here's Phil.
Phil's Gang Stock Corner is brought to you by the MaxVest 1000 Stock Charts.
And welcome to Stock Corner. This is the point of the show, or part of the show, where we take a look at how well our members are doing. Now, when you start as a member, we call you a working investor group. There's 5 stocks in our portfolio that we've been in for over 2 years. And we let you take one of those stocks, and every day at 2 o'clock, we post, 2 o'clock Eastern Time, instructions on each one of our stocks that's in our portfolio. We tell you exactly what to do. Just take one. And we give you the directions when to buy, when to add to your position, when to put stops in, or when to sell short, or when to run like hell. All based on the color code of our charts that I designed, that the algorithms identify for us the money going in and out. That's all we want to know. We just want to know the money. I don't want to hear the stories. I don't want to hear the stories about the company and what the company does, because it's all nonsense. It's all nonsense. The only thing that counts are the big hedge funds, the big insurance companies, the big banks. Where is their money going? And that's what my chart does. It identifies where it's going. And we do very well. We do very well. In fact, we just finished the quarter. The S&P, they said they had their best market, their first quarter since 1988, up 10%. Well, we just finished our first quarter with our portfolio, and we're up 15%. What they don't tell you about their portfolio, the best quarter since 1988, is that once these rates, again, okay, if these rates continue to stay where they are, okay, and they don't cut rates, it's going to kill these stocks. We're going to go into a continue the crash that we already started. Remember, we already started a crash. I told you January of 2018 we're going to have a crash in 2018, and it happened, and the market went down 20%. And why it went down is because it hit 2.5%. Those interest rates were too much for the market. But I'm going to get into that in a moment. But first, let's go to our stock corner and let's see how they're doing. We have a few stocks we've been working on here. Some stocks that we got in February. So if you joined us on February and you followed us on February with our portfolio, we have Costco. Okay, we got in February. We're up 14%. BBY, we bought that in February. Again, using our color-coded chart to guide us. Using the big institutions, their money to guide us. That's up 23%. Now, and also Tiffany. On our color-coded chart, when it turned green, told us when to buy, we're now up 17%. So just in February, those three, 23%. Costco, 14%. I'm sorry, BBY, 23%. Costco, 14%. Tiffany, 17%. And in January, we bought Apple, and we're up 20%. Now, you hear me every day talk about this market. This is insane. This market is terrible. This economy is terrible. For anyone to come out and say, and he's getting this bad advice. See, he's caught. The president is caught. When he got into this market, and when he was elected, he knew this economy was terrible. He knew the economy has never recovered since 2008. It's been a total lie that we had a recovery. The guy on Main Street never recovered his losses from his house. He never recovered his losses from the stock market. The only people that recovered were the 1%, the very wealthy, who are in the stock market. They recovered because of the assistance of QE and stock buybacks. I mean, my God, if you go and you say, okay, we're going to do QE, we're going to drop interest rates down to 0, and then they start taking that money and they give it just to the big boys, they give it to the big hedge funds, they give it to people on Wall Street, they give it to the 1 percentile, who 85% of their income's from the stock market. That market went up 357%. Not only did they get their money back, but they doubled their gains like that. They're doing terrific. But the guy on Main Street, he gets screwed. And that QE, as I mentioned to you, that QE is nothing but a bold-faced lie. It's a complete confidence game. They'll tell you they're going to do all these wonderful things by dropping interest rates. And when the big guys and the wealthy are making money in the stock market, they're going to create jobs because they're going to create businesses. All a lie. What they do is they take their money and put it in a pile with the rest of the money. Quantitative easing is a form of an accounting trickery. Just like stock buybacks, that's accounting trickery. CEOs make out terrific. Because remember what they do, they steal. The CEOs are stealing. What they do, the CEOs go in and take from their capital investment account. That's the money they set aside. They make their profits, and a certain percentage of those profits goes into a capital investment account. That's the money they use to buy new machinery, new equipment, new technology to increase productivity. And with that increase in productivity, without having to add labor, they benefit themselves and they benefit the workers that are already there, and they give them raises. So what they do is they went in and they took the capital investment account money and they bought stock. They bought stocks. They bought company shares back. So a company had 1 million shares outstanding. They bought 500,000 back. Why'd they do that? Because when they took their earnings, their lousy profits, and spread them over less shares, it's a trick. When you spread them over less shares, your earnings look much better than they are. And that pushes up your stock. So your earnings look better than they are. The profits are fake. They're paper increases. So when that earnings go up, the stock goes up, and the CEO, his income, his compensation tied directly to how much stocks go up. So he doesn't put money in new equipment, new machinery. So no money ever trickles down to Main Street. So instead of giving people money, what do? They give them credit. Because these same people, the 1 percentile, the 1 percentile, they control the banks, they control the financial sector, and what they do is they take and give people credit. They let them buy a house with no money down. They let them buy a house with liar loans. They let them buy a car when they can't afford it. And they make it so easy to say that you don't need money. You don't need a raise. Here, we're going to give you loans. They're not buying a car, they buy debt. They're not buying a house, they buy debt. And that's why this country's in deep trouble. Trump knows that, and that's why he's saying, I got to lower rates. Because
go to philsgang.com or give them a call at 877-600-GANG. With the philsgang.com membership, we bring investors right to the floor, into the pits with Phil's daily live webinar classroom. Get inside market guidance on investing strategies. Find out more at philsgang.com or call 877-600-GANG. That's 877-600-4264. Don't have time to analyze and study stocks? At philsgang.com, we recognize that there are all types of investors, and we also recognize that your time is valuable. So we offer investing programs for all individuals. We offer investing programs for long-term and short-term positions. And philsgang.com provides quick and easy to understand investing videos that only take a few minutes to watch. With the philsgang.com investing programs, you will learn technical stock charting, how to execute your trades, and most importantly, you will gain the confidence to know when to get out of a stock and take profits. Sign up at philsgang.com. That's philsgang.com. Or give them a call, 877-600-GANG.
I've been telling you since January of 2018 the market was going to crash, and what was going to tip the market over is China and the global economy, that it was slowing. Now what are you hearing? Nobody ever talks about the bond market. I always talk about the bond market with my gang because we watch the bond market. This is how we get our returns. Give you an example. We bought in January Netflix. We also bought Nike. We bought Hess. And we bought Airlines, LUV. Those four, we have an 18% return. Again, I'm not saying every gang member made 18%. I can't say that because I don't know when they get in or when they get out. I give them the instructions when to get in and when to add to their position, when to take profits, when to get out, when to run like hell. And if they follow that, then that was the returns we had on those four stocks.
Find out more at philsgang.com or call 877-600-GANG. That's 877-600-4264.
Hi, I'm Phil Grandy, philsgang.com. Are you tired of being lied to about some magical economic recovery that only benefits the 1 percentile? And then when the market does collapse, you're sitting there calling your broker, what do I do? When you should be shorting? Learn how to short the market. Continue to listen to my radio show, philsgang.com. Become a member, only $39.95 a month, and learn how to short.
Don't wait. Find out more at philsgang.com or call 877-600-GANG. That's 877-600-4264.
I've been telling you since January of 2018 the market was going to crash, and what was going to tip the market over is China and the global economy, that it was slowing. Now what are you hearing? Nobody ever talks about the bond market. I always talk about the bond market with my gang because we watch the bond market. This is how we get our returns. Give you an example. We bought in January Netflix. We also bought Nike. We bought Hess. And we bought Airlines, LUV. Those four, we have an 18% return. Again, I'm not saying every gang member made 18%. I can't say that because I don't know when they get in or when they get out. I give them the instructions when to get in and when to add to their position, when to take profits, when to get out, when to run like hell. And if they follow that, then that was the returns we had on those four stocks.
Find out more at philsgang.com or call 877-600-GANG. That's 877-600-4264.
Hi, I'm Phil Grandy, philsgang.com. Are you tired of being lied to about some magical economic recovery that only benefits the 1 percentile? And then when the market does collapse, you're sitting there calling your broker, what do I do? When you should be shorting? Learn how to short the market. Continue to listen to my radio show, philsgang.com. Become a member, only $39.95 a month, and learn how to short.
Don't wait. Find out more at philsgang.com or call 877-600-GANG. That's 877-600-4264. philsgang.com has taught thousands of people from all walks of life how to invest and make profits in the stock market. philsgang.com can help you generate extra income, maximize your retirement financial savings, and teach you how to avoid costly investing mistakes. With the Phil's Gang membership, you get all the comprehensive stock research and data, analysis tools, Phil's recommendations, and the professional customer support you need to make smarter, more profitable investing decisions. Don't wait. Call today, 877-600-4264. 877-600-4264. 877-600-4264. Or go to philsgang.com. That's philsgang.com. 877-600-4264. Did you know Phil Grandy hosts a daily live stock market investing webinar class? Never miss a beat with the market and your investments. Learn, invest, and profit with philsgang.com. Call 877-600-4264. That's 877-600-GANG. Welcome back. Are you a fan of the Phil's Gang radio show? Then you should check out philsgang.com or give them a call at 877-600-GANG. That's 877-600-4264. Now, here's Phil.
And welcome back to Phil's Gang. Join my gang and start with just one of my 5 stocks. We have a portfolio. I have a portfolio of 5 stocks. Been over 2 years, my gang. We have a return of 15%. I'm not saying every gang member has that because my gang doesn't send me money and I manage the money for them. We have a portfolio of stocks, the same 5 stocks, that every day we identify what to do with each one of those stocks. And these are the returns we have if they follow those instructions. Some do, some don't. The ones who do, they do great. It's easy. It's an easy way for you to make money. And then you don't have to care about this nonsense out there, this noise, because they continue to lie to you. Trump is saying we need another drop in interest rates. We need QE because he knows the economy's in deep trouble. He knows that. Now listen how they contradict. This was Varney on Fox talking to Larry Kudlow. Saying, "Oh, look at it. We had a great jobs number. We should raise rates." Listen to this. There should be no rate cuts.
We've got a strong jobs report, so surely you can say goodbye to any chance of a rate cut. In fact, you might be looking at a rate increase. What do you say?
I don't think so.
I don't think so. Varney's a dope. A great jobs report? Where? I don't see it. I see 196,000 jobs. All but 26,000 jobs are mostly bartender and waitress and healthcare, lousy jobs changing bedpans and then run down to the bar, get something to drink and a hamburger. That's what the jobs are. Also, the reason why Kudlow said, well, I don't think so, because he knows what the president knows. Not only are jobs lousy, but we have a historic debt of $22 trillion. We have historic household debt of $15 trillion. We got historic corporate debt of $9 trillion. They borrowed all that money that's free, but it's no longer free. Now they got to pay interest on it. And oh, by the way, the banks are having a hell of a time because the banks are tied to those corporations. Those bank loans that they gave for free, now they had to start raising rates on these banks, and now they got a real problem. And that's why the banks are not leading the stock market. That's why for the last 15 months they haven't been leading the stock market. A stock market can't sustain itself unless the financial center banks are leading. They've always led the bank for the last 200 years. The banks always lead the market. In the last 15 months, the reason our stock market only went up 40 points in 15 months. Oh, they don't tell you that. They're going to tell you, oh, look at this. We had the greatest quarter ever. How about the last 15 months? Why is the market going up? Because hedge funds are pulling their money out. That's why. Because just like Trump, they know we're in deep trouble. Deep trouble. So I want you to, just how can they say we got, think about it. We got the durable goods orders declining. We got weak housing starts. We got the bond market with yields right now inverting. We got huge trade deficits. We got low volume. The headwinds are incredible. We got retail sales falling off a cliff. And look at the retail jobs. The retail jobs today tanked. They're cut by 12,000. Oh, but they added 61,000 healthcare jobs. How about manufacturing? Cut by 6,000. Oh, but they added 170,000 service jobs. So think about this. They cut manufacturing 6,000 jobs. They cut construction 16,000 jobs. But they added 170,000 service jobs. Are you nuts? What are you, nuts? That's why when Varney, that dope, he says, "Oh, everything's great." No, it's not. Let's take a look at our growth. The first quarter, 2018, 2.2% growth. The second quarter, 4.2%. Why? How they do that? They cheated. They reached out in the future and they cheated and they pulled back soybeans and put all these soybeans in the second quarter to make themselves feel good. It looked like the economy was growing when it wasn't. Then what happened? Third quarter, it dropped from 4.2 to 3.4. Then from 3.4, it dropped to 2.6. Doesn't pay to cheat, right? The end of 2018, they kept telling, oh, we're going to have a 4 to 5% increase. No, we're down to 2.9%. Now, the first quarter 2019 we're in right now, we got a negative growth. No growth. No growth. Now, remember, the first quarter in 2018 was 2.2. Now we dropped a year later. The first quarter is negative. Now, for the year of 2018, they don't even think we're going to hit 1.5%. For the entire year, 2018 was 2.9. For 2019, maybe 1.5. Again, the lies, all the lies, the fake narratives. Fastest economic GDP growth in history. Wrong. We had faster GDP growth in the 40s, the 60s, and the 90s. Best wages ever. Not true. Wages were better in 1973. Strongest economy ever. Not true. We had a stronger economy in the 20s, the 40s, and the 90s. Less unemployment. It's just unbelievable. They said they have the big. Larry Kudlow came in and said, we have the biggest capital investment in 20 years. A total lie. The government itself says it's the lowest in 60 years. Because said corporate earnings best. No, they're not. If you reverse out the stock buybacks, the corporate earnings suck. It's all fake. It's all paper. So that the 1 percentile, the very, very wealthy, is in the stock market all the time, could keep making money in the stock market. QE, they're going to do this all. They want to do this all over again because Trump is scared to death. He sees what's going on. Big problem. He saw wage increases in this report. Now, for everybody else, that seems good, but not for the Fed. When the Fed sees wage increases going up, that means inflation. They don't want inflation. So what do? They'll start raising rates. Why do you think Trump came out there and said, oh, no, we're going to drop rates?
It should actually now be quantitative easing, and I think they should drop rates.
Yeah, drop rates? No. Dropping rates means the economy's bad. Raising rates means the economy good. Quantitative easing is fraud. Stock buybacks is fraud. It always works for the wealthy. You know, they did the same thing to us after the housing crash. Remember TARP? Same thing. They came out lied then too, just like QE. QE, they told us we're going to give all this money to the rich. They're going to create all these jobs, and they're going to with good wages. None of that happened. What they do, they did stock buybacks, and they went in the stock market, and they speculated. They kept all that money and put that money in the pile with the rest of their money. Let's go back to TARP. Let's go back when you had the housing crash. They came out and said the same thing. Oh, we're going to bail out the 9 million homeowners who are upside down on their equity, and we're going to bail them out. We're going to bail them out because their values are upside down. They go to Congress the first time, it got shot down. Second time, they made the promise that they would take, nothing in writing, they just made the promise that they take the TARP money they're getting, the bailout money, they put $250 million aside and would help these people whose homes were upside down. 2 weeks after Congress signed the bill, the corporations, know what they did with the money? They took the money and they gave it for Christmas bonuses and year-end bonuses. That's where the money went. It's no different with the stock buybacks and the QE. Don't pay attention to it. But, you know, I sit here and tell you that, and I should be saying you don't get in the stock market. You're probably saying, why wouldn't he tell people not to get in the stock market? Well, wait a minute. We're up since January on Apple 20%. We're up in Tiffany's 15%. 17%. We're up in Best Buy 23%. So. And we just got into Morgan Stanley. We're up 4%. We just got into that. So even why I tell you all this market, and I'm telling you the truth, the market's still the best place to go. But only if I can convince you to stop listening to the noise, stop listening to these experts on TV, and follow the money. And I'm asking you, I say, look, you follow me for 1 month, just take one of my 5 stocks, $39.95, don't do anything until 2 o'clock in the afternoon or when you come home after work. And whatever one of those 5 stocks you select, do exactly what I tell you to do. Do exactly what I tell you to do. And you're going to say, now I'm finally making money. And you don't care what they're saying. You don't care about the craziness.
ISM manufacturing data. Ashley.
It's a great number, Charles. That is a very strong number.
No, it isn't. Manufacturing is not a strong number at all. See, they tell us what we want to hear, just like CNN and MSNBC told us what people wanted to hear who hated Trump, that he was going to jail. No difference.
Want more information on this show? Go to philsgang.com or give them a call at 877-600-GANG. Why pay thousands of dollars for a weekend seminar when for only $39.95 a month, philsgang.com provides all the daily market investing information you need to make profits in the stock market. With over 40 years of investing experience, only Phil Grandy and the philsgang.com team provide daily live investing webinars, up-to-the-minute market updates, all the investing educational videos you can imagine. Don't hesitate to learn, invest, and make profits. Go to philsgang.com or call 877-600-GANG, 877-600-4264.
Thinking about investing in the stock market? Go to philsgang.com, where we have over 50 years experience in trading and investing in the stock market. Phil's Gang teaches you how to make profits in the market with stock chart analysis, up-to-the-minute alerts, and always keeping you informed with professional guidance in long and short-term positions. Go to philsgang.com or call one of our professional staff to answer your questions. 877-600-GANG. That's 877-600-4264. Stop wondering about your financial future and start doing something about it.
I will make sure that all the stocks that we are engaged in that are going up, we will get maximum returns, and we will be out of those stocks by watching our color-coded chart. You never again will have to worry about being out of an individual stock or an ETF or an index when the market crashes. You will be out before it does happen. All you got to do is join my gang, 877-600-GANG, 877-600-GANG. I'm reaching out to you. All I'm asking you to do is to reach back to the kids at St. Jude when you're making money.
Don't wait. Find out more at philsgang.com or call 877-600-GANG. That's 877-600-4264. That's 877-600-4264. With the philsgang.com membership, we bring investors right to the floor, into the pits with Phil's daily live webinar classroom. Get inside market guidance on investing strategies. Find out more at philsgang.com or call 877-600-GANG. That's 877-600-4264.
Does your money manager send you an alert when the stock position that you're in goes up or it goes down? Does your brokerage send you an alert to get out of a stock position so you don't lose money? Of course they don't. Here at philsgang.com, we keep all of our members engaged with the stock positions that we recommend. Nobody does that for their clients. Nobody. Go to philsgang.com and become a member to get up-to-the-minute alerts. That's philsgang.com. Stop losing money and start making money with Phil's Gang.
I've been telling you since January of 2018 the market was going to crash, and what was going to tip the market over is China and the global economy. It was slowing. Now what are you hearing? Nobody ever talks about the bond market. I always talk about the bond market with my gang because we watch the bond market. This is how we get our returns. Give you an example. We bought in January Netflix. We also bought Nike. We bought Hess. And we bought Airlines, LUV. Those four, we have an 18% return. Again, I'm not saying every gang member made 18%. I can't say that because I don't know when they get in or when they get out. I give them the instructions when to get in and when to add to their position, when to take profits, when to get out, when to run like hell. And if they follow that, then that was the returns we had on those four stocks.
Find out more at philsgang.com or call 877-600-GANG. That's 877-600-4264. Short on time but want to invest in the stock market? Let philsgang.com help you. For only $39.95 a month, you get complete access to all of Phil's powerful investing programs, videos, and resources.
That works for me. Log in, watch the videos, and make profits.
Find out more at philsgang.com or call 877-600-GANG. That's 877-600-4264. philsgang.com. Welcome back to the Phil's Gang Radio Show. Want to know more about Phil's Gang? Go to philsgang.com or give us a call at 877-600-4264. Now, here's Phil.
And welcome back to Phil's Gang. You know, on January 7th, I said they're going to have to cut rates because this economy cannot even take a 2.5% rate. Here, this was January 7th. Remember, it was January 16th. I said the market was going to crash. Remember, I said the market was going to crash in 2018, and I was right. It went down 20%. Oh, but they don't call it a crash. That's amazing to me. When we had when back in 1987 and back in 2000 and I think 1987, 2002, when we went down 20%. Oh, that was a crash. But here's the important thing. Listen to what Yellen says about QE. I've always told you that quantitative easing is a killer. It kills the financial system. QE is the biggest threat to our economy and financial system for Main Street, but not the wealthy, not the 1 percentile, not hedge funds, not the insurance companies, not the banks, not Wall Street. QE for them, and stock gives them money free to go in and buy more stocks. How? Think about this. 40% of the people in our workforce of 157 million people make less than $20,000 a year. You think free money's going to help them? You think free money's going to help somebody with $60,000 after they pay their taxes and they take care of their family and pay their mortgage payment? No. What helps the people is wages, good jobs and good wages. That's where their wealth is. And try to get that house payment down over 20 years, 30 years, get it paid off. That's where the people's wealth is. Everybody else, the 1 percentile, all their wealth is the stock market. What you got to learn to do is trade the stock market and forget the noise, and you invest in the market. You don't care about the noise. As long as you're on the right side of the transaction, there's nothing better than the stock market. You hear me every day talk how bad this economy and the market is. And you're probably wondering, why does he buy stocks? I buy stocks because I'm watching the hedge funds, the insurance companies, the biggest banks. They bought Costco. We're up 14%. They bought Apple. They're up 20%. They bought Tiffany, up 17%. I don't care about QE or anything else. Because if you start thinking about fundamentals, but here's what they're going to tell you. They tell you every day some fundamental to make you feel good. They want you to feel good. And listen how they contradict themselves. First, listen to this.
All right, the consumer's alive and well, and the economy's alive and well.
All right, really? But then, listen to this.
A separate report showed that growth in the services sector fell more than expected in March. According to the Institute for Supply Management, activity hit a 19-month low, weighed down by a drop in new orders.
Consumer economy, well, no, not at all. Service jobs drop? No, the consumer's dead. He's got so much debt he's choking. Now here's another one.
Are you excited about the current state of the economy and the current state of the market?
I'm ecstatic about it.
Oh, he's ecstatic, but listen to this.
Yes, let's see. D's income, a miss, down 1/10.
Get that? Personal income down.
Yes, let's see. D's income, a miss, down 1/10. Spending, a big miss, down 0.5%.
Spending is down. Income is down. Oh, but wait a minute. What did they say before that?
Are you excited about the current state of the economy and the current state of the market?
I'm ecstatic.
Oh, he's ecstatic. How can he be ecstatic when the small guy's getting killed? His spending, he can't spend. That's why spending's down. The middle class is shrinking. Look, even Yellen, as dumb as she was, she always said one thing, that savers are getting killed with QE.
Explain to the senior citizen who is just hoping that CD will earn some money so they don't have to dig into the principal what impact you're having on a policy that says we're going to, for as far as the eye can see or foreseeable future, keep interest rates low. They are hurt by that policy.
Senator, I agree and I understand.
Okay. They're hurt by low savings. Of course they're hurt by low savings. Because when there's low savings, the whole economy is hurting. Low savings, what do the savers do? They try to find interest. They try to find yield. The first thing they get in trouble, they start buying real estate. They buy some asset they shouldn't be in. That's the first thing. But here's the real problem. When you have low interest rates, then remember what savers do. As I said, they go out and they try to find deals, try to find better yields. But they also go buy bonds. When they go to buy bonds, there's no money. Remember, Treasury bonds always compete with savings. So how do we build this country? Why are we the best country in the world? Because of our small jobs. That's why. Because of the middle class. That's why. Where does the middle class? It's the middle class that creates small businesses. It's small businesses that provide 72% of our growth. 72% of our jobs. But small businesses are dying. We've had more small businesses close their door than open. Why? Because when they go to the bank to borrow, it's an existing business, they go to the bank to borrow, they want to expand, they can't. There's not enough money, so they raise interest rates very, very high on them so they don't take all the money out of the bank. So they say, okay, is interest rates too high? I'm not going to add on to my restaurant. I'm not going to add on 3 more chefs. I'm not going to add on. See, that's how the economy gets hurt. Trump knows this. Okay? But remember, once that middle class starts shrinking, remember, it's the best way to redistribute wealth is to have a big middle class. But the middle class under Obama shrank by about 14%. It's still shrinking. And it's shrinking because there's no savings. And when there's no savings, small businesses don't grow and startup businesses don't grow. Now, the other problem is corporate debt. When you have 0% interest, all the corporations go out with this QE money. Remember, you have to have QE to get the interest rates down to 0. Then when it's down to 0, they loan money to the banks, start loaning money to, and the Fed starts loaning money to corporations. They take that money, and instead of putting it into capital investments so you can get a wage increase and you can find a better job, no, the CEOs take that money and buy stock of the company back so they can push the stock price up, the earnings up and profits up that are fake, push them up higher, and then the stock goes up because the CEO, his compensation is based to the stock. So you can't win. So the market keeps going up. So as the economy keeps getting worse and the stock market keeps going up. That's why I keep telling you, forget about all the what they're telling you about companies and the fundamental. Forget it. Just if you follow me and just follow the money, and it's so easy. Infrastructure and debt. Do you know our national debt is growing 30% faster than our economy? So the first thing they do, government cuts back on what? Infrastructure. Do you notice we have no infrastructure going at all? Do you notice that? Remember Trump promised infrastructure? Not happening. Why? Because when your debt is growing 30% faster than your economy, I mean, God, when you got historic national debt, $22 trillion. Matter of fact, that's a lie. That's a lie. You know, they lie about our real debt. They take a lot of that debt and they put it off balance sheet. Like, for example, they'll take a lot of debt that they fund hurricanes and those kind of things, but they don't put it down on the balance sheet. They push it to the side off balance sheet, like what Enron did and what Enron was going to go to jail for. That's what the government does, the same thing. So that $22 trillion is a lie. It's a lot more than that. A lot more than that. So don't believe it's only $22 trillion. But as an investor, if you're trying to sit here and try to figure all this out, it's impossible. You got to be doing it like I'm doing 24/7, figure out what's going on. But at the end of the day, I make my final decision for my members on the stock like Costco. Why? Anything to do with its balance sheet? Anything to do with its earnings? Anything to do with its margins? Anything to do with its payrolls? No. Has to do with the biggest banks, the biggest hedge funds, the biggest insurance companies. Are they putting money in Costco rather than putting money into Walmart? The answer is yes. I put it up on my chart and you can see it. If I put it in on Costco, and we've been in Costco, look how it's been green. Look how it's shot straight up green. Right? So we're up 14%. Do I care about infrastructure or corporate debt? No, I don't. Okay? But now I take Walmart. Am I going to buy Walmart? I look. No. Walmart is red. They're pulling their money out of Walmart. That's why join my gang and just start with the first 5 stocks. And now the 5 start with one. It works. For heaven's sakes, it works. And remember, when you start making money, please help St. Jude. St. Jude. There's nothing better than St. Jude. In 1966, kids with leukemia, 4% lived. That was it. Now 90%. I will help you make money. You help the kids. We all win. Stop listening to this nonsense. It'll drive you nuts. What are you, nuts? We'll see you on the charts. Have a great weekend.
You have been listening to Phil's Gang with your host, Phil Grandy, on the Off the Wall Street Radio Network. Off the Wall Street Radio Network. Remember to visit Phil's website at philsgang.com. That's philsgang.com. Or call the office, 877-600-4264. That's 877-600-4264.
It's up to me to